Welcome everyone to the Kendall Report. It is Tuesday night. Had quite the day yesterday. Before I get into tonight's video, make sure you subscribe, hit that like button. I saw somebody mention we need at least 1,000 likes. Getting 4,000 or 5,000 views you think you could at least hit that like button. So do that for me. That would be awesome. And make sure you comment on these videos. That also helps the algorithm help me to be found and hopefully help more people. So let's get into tonight's video. Last night, I told you folks that the algos on the daily were turning up. Everything was turning up on this market. And it looked like we were going to get a Tuesday and Wednesday rally. It looks like we have potentially another positive day coming toward us. And we finished the month off, which is somewhat interesting, is S&P up 6.2%, NASDAQ up 10.7%, Russell up 9.7%. So a pretty decent start to the year. As I mentioned the other night, it's absolutely the opposite of how 2022 started. And, you know, we're seeing this pretty big rally maybe continuing. It's interesting. You'll see in the database review here in a few minutes, we got a little traction on the short-term data. Actually had more buying than selling. Not a lot, but it's just not going down. It's sort of like the employment numbers that we'll get on Friday. They just won't go down. It can't. It's as hard as the Fed is trying to destroy the markets, they don't seem to be able to do that. So a couple of reviews, and I'll get into. I'm going to make this video as short as possible tonight, get you set up in the morning, because remember, I'll be live from 1 to 4 p.m. tomorrow for the FOMC meeting. We'll do that live. Going to bring in a lot of elements, some of the stuff that I do in the live room. We'll definitely be participating in what's going on tomorrow. So looking forward to that. But let's look back on yesterday. Earnings, Exxon, the evil fossil fuel company, up 2.2%. The UPS up 4.7%. We're looking at International Paper up 10.7%, and even Amazon up 2.6%. So economy just won't falter. I suspect the Fed's going to be somewhat aggressive tomorrow in the speech that they're doing. Just let me cover a couple more things. I'll get into the Fed here. FHA housing prices were down 0.1, so they're starting to stabilize just a little bit. Case shower at 6.8, last time 8.7. So once again, they're going to play up this number that, you know, inflation is moderating, and it is. There's no way around that. That is what is happening. And what is it going to continue to happen? Probably. At some stage, we're going to hit the bottom, and it's not going to be 2%. I'll talk about that when it's appropriate. But I think the earnings that we saw come out today, tomorrow, pretty much there's some stuff coming out, but no one's going to care with the Fed coming out with the FOMC, the conference call and all that stuff. No one's really going to be paying attention to that stuff. Meta comes out after the close. Not sure anybody really cares about that. Maybe they do, because the large cap index, this NASDAQ, was up 10.7, 11% in 1 month. I remember I think if you go back on history, you're going to see around 6.5, 6.9. Correct me if I'm wrong, but overall, that's the returns on the markets, right? So we had 11% in 1 month. Not too bad. Keep that up. You got a pretty big year ahead of you. Of course, that won't happen. But the point is that we had a pretty decent month. So let's go ahead and let's talk a little bit about about what to expect tomorrow. I'm going to tell you I put on the video that this is the big dilemma for these guys. Is going to be, will they continue to raise rates? I think we see a 5-handle rate eventually. Could be 5.5 on the short end of the market. And as I mentioned last night, it looks like the long end wants to try to push a little higher in yield, but nothing material. I think the yield curve still remains inverted, but I also don't think it really means what everybody think it means. If you look at how many times the yield curve has been wrong, it's a lot more than it's been right, and people don't talk about that. But it makes for good headlines, and it's good to drive the algos on a good day when you want to talk recession. Everybody's still kind of talking pretty negative, but the markets aren't really buying into this. And of course, you can see everywhere this is, bear trap, bull trap. You can see everything that's going on out there in the noise out in the internet. Those are the people drawing trend lines on indexes and things like that, which is pretty pretty laughable from my viewpoint. So we'll get into our database in a minute, but the Fed's not going to leave their story. I've been telling you folks this. They're going to stick with the inflation story. They have to, whether it ends up they say a couple words that everybody globs onto and gets bullish tomorrow. We'll see. It does look to me that we've got a little bit of selling probably coming into the meeting. I'll go through what the algos are telling us on the shorter term stuff, but it's pretty minimal, I think. We're already down, last I saw, we're down 13.25 handles on the S&P. And if you watch the close today, man, they spiked this thing to all the way to 91. It was pretty crazy. We printed 40.91 right on the close. So big time squeeze for sure. So hopefully, I'm not sure what the handle is, but hopefully I do have a moderator I signed up today. So hopefully we get those weird trolls coming out. We'll get them knocked down pretty quick. Hopefully they're out there. If you are out there, give me a thumbs up or something. I know you're out there. Anyway, so a couple things along the lines going down this Fed road just a little bit further is this is going to get really interesting, I think, because they're going to have to, thread that needle, as they say. But look, we're going to probably get a 25 basis points tomorrow. The next meeting, we get another 25. I think they do pause for a minute and see if there's any lagging effects and see what kind of numbers are coming out. I remember several months ago I was talking about they're not going to stop till they break something, and they can't break it, which is really kind of interesting. And I will go on record a little bit for saying I think the recession was last year, those 2 negative quarters that everybody, when they were redefining the definition of a recession, that was actually it. Whether we're going to get negative quarters or not, we'll see. Everybody's predicting, third and fourth quarter. You have to go out pretty far right now to try to guess that we're going to get that, because right now the numbers aren't out there. You can see consumer sentiment, all these numbers that are coming out, just not there at the moment. So maybe they'll show up. We'll go through that. So let's go ahead. I think I can get through this video maybe a touch over a half hour, mainly because I'm going to be live with you folks tomorrow. But I want to make sure if you can't come tomorrow that you can at least have the setup and how the market's looking. And I mentioned, and I'll go through the details in a little bit here, is that the 10-period moving average was the magic number yesterday, a simple 10. Anything below that was a bargain. Those of you that were in the live room on Monday, that was the case. I was screaming about that and mentioned it last night as well. So let's get into the Wavetech database and see how fast we can get through here. And I'll see you folks tomorrow. Remember, at 1 p.m. Eastern time, we'll see you there for the FMOC meeting. Okay, so here we go with the database, and we're looking at, there was 312 buys, 212 sells, so nothing material. We touched up a little bit to 76.03. We were at 75, I think, 02 last night, and that's pretty much what's going on in the database, but it remains at 70%, and so we'll no expectations. It's very minimal. There's really nothing to garner from this other than we're staying very, very positive from that standpoint. So we're going to roll right ahead. Let's go ahead and hit the S&P, and let's get into the crux of the technicals. Okay, looking at the algos on the hourly S&P, and just looking at a couple comments here. The earnings on the big, there are going to be some earnings flattening out. But as I mentioned last night, if you look at the S&P as a whole, with all the big stocks in there, we're looking at 17 handle. The multiple, if you take out the top echelon, the top 60, 70 stocks, all of a sudden you're at a 13 multiple. So a lot of these things have already corrected. And like I've been saying, the database is reflecting that. That's why there's so many symbols long. That's why the intermediate database is long as it is. So looking at the hourly algorithms, we're sitting here right now at right on support at the moment. The 10-hour moving average, 40.74. We do have a few downward projections. This is a 1-hour chart we're looking at. The downward fib targets right now, 40.57, 40.44. That would be pretty extreme, but that would put us back toward the moving averages here, 21 and 40 at 40.51, 40.48. So it's pretty good support there. But the PPM1 is, and the algo is suggesting that we're going to lose some steam. So there may be some values just a bit under this 40.74 level. I'll show you the market grid here in a minute, and that will tell us a lot more about that when we look at the daily market grid. Let's go over to the daily, because this was the real key yesterday, was this chart here, which was basically the algos were showing that, and I mentioned this, that we're probably the bar that we saw on Monday was probably the low bar. We did print down a little bit lower. We printed an S2, basically an S2 R2 yesterday, and it almost printed R3, I believe. So we got yesterday, S1 was, let me get this up here. I won't bring it on the screen, but I'll go through the market grid here on using TradeStation in a minute. But if we look at yesterday, the S2 number 40.06, the low was 40.07, I believe. Yeah, 40.0750. So smack on that S2 R2 are actually, as it turns out, we have a slightly different calculation here on TradingView than we do on that, and it's mainly because of how they're calculating the database every day. So let me just flip over to TradeStation here real quick, and we'll just take a look at it there. So yesterday we're looking at 40.92 was RXT, so we printed 40.9125. So we printed RXT right on the number there, and yesterday's S2 was 40.13, so we printed just a touch below it. So let's go ahead and cover that market grid right now, and we're looking at the symbol, looking at the overnight right now, 40.70. So I've written down on my notes here, S1 40.70 is probably the low. We printed 75 already, so we're probably mostly satisfied with the downside. S2 would be an extreme, I think, at 40.53. So look for some support around 40.70. And then on the upside, R2 41.18. And I think those trend line folks have got to be getting a little nervous about how we're trading, especially one of the patterns that is suggested on this right now is that we have high target 41.36 is a minimum target coming in right now. And that looks like pretty much a given from that standpoint. You see the PPMs turning up, all that. Let's go back to TradingView and take a look at what the algos are telling us. So the algo is telling us one more day up, and then Thursday we're likely to see a little backfill here, just a little bit into Friday, but we should hold that support line, which is the 10-period moving average, which is right now at 40.36, but it is going up right now, 13 handles per day. So that'll be 40, we'll call it 40.40, and then 40.53. So there's going to be pretty decent support just about in the ranges that I was talking about where we're likely to trade. So we should see this actually come up, continue to see this angle of attack go on. If you look at the other algos, it looks like several more days of PPM 2 is in place, PPM 3 is staying positive. And what's most interesting to me, at least from my viewpoint, is at the very bottom here, the algo on the Wavetech 200, which is tracking what the probabilities are to happen with the 200-day moving average. What this is telling us is that it's likely to start to turn up as we come in to next week. It's flattening out. It's still negative as right now, but it's negative by 0.03. These numbers don't get as drastic as they do most of the time. You just don't see the drastic numbers, but this is basically upsloping where the 200, not only did we get above it, that now we're looking at staying above it and seeing that average start to flatten out and turn higher, which tells you have a much bigger trend going out there. So be careful about your negative sentiments. Doesn't mean we can't have a little backfilling, but I'm thinking as we come into the end of the week, I'll cover this more as we get into tomorrow's action and tomorrow night and Thursday night's video, but we're likely to see, if these prices stay together, we're likely to see much more traction come in on the database, which is really slanting the probabilities of going higher as the year goes on. And like I said, at least through Q2, possibility going into Q3. I'm not even going to reveal what I saw earlier on the monthly charts, but so I'm going to change this over real quick. I'm going to put SPX on here, and just so we're going to flip over to the cash market. And I'm also going to go to a monthly chart. And I want you to see this since it's the beginning of a new month. We had something very interesting. We've closed over the 10-period moving average, the 10-month moving average, and there's still resistance right now at the 42.22 level. That's where the 21-month moving average is. It also is showing that the market grid is still down. I was thinking that we might see it turn up, but we're seeing this is actually, since it's cash, the market grid isn't updated here. Okay, so that's right. That's a good thing to point out. So I'll put the E-minis up so you can see this in a minute. But the algos are all suggesting here at the moment that the moving average, this looks like by April, what we're seeing is as we close over the 10-period moving average, it tells us the 10-period moving average on a monthly basis is going to potentially start to trend upward. And the only way that can happen is you have to remain above that 10-period moving average, 39.58 right now. So that's, I talked about that number, the 39.60 level is major support. I remember saying this one night, is if you see that number, that's the bargain for maybe for 2023. I don't think we ever see that number. We actually saw it down below there. We did see, if we look at just on, this is cash market now, by the way, we're looking at, we did get down to 37.94. So that not quite down to that key level, but it's pretty impressive if you saw anything like that. I'm going to put the E-minis up here on the monthly just so you can see. This what I want you to see here is the market grid did turn up as I thought it would, because the way that TradingView won't allow the calculation till we get the first tick in the morning on the live cash. So we're definitely seeing this turn up, and I just want to give you a range basis the futures. 4174 is R1, R2 is 4269, R3 is 4363 and 4448. And I've been talking about the potential of this market moving up into that 42-44 handle. There's even some calcs that come out that are talking about a 46 handle. I don't see some new highs coming out at this time or anything like that. No ATHs or any of that fun stuff. But we are looking at overall, and I'm not going to cover the monthlies and everything in the NASDAQ. We'll have 3 hours tomorrow, so if you ask some questions tomorrow, I will definitely answer them during the live stream. So make sure you do that. So I just told you I'm not going to cover the monthly on NASDAQ and the others, but we're going to go ahead. We're going to go top down. We're going to start monthly, weekly, daily, just very quickly. I'm going to run through these. But the market grid did turn up here as well. We do have an upward sloping 21-period moving average, not that substantial. It's actually rounding off right now, and that number is at 308. And as we look at just the market grid, R1, 12,500. I'm going to round these numbers off, 12,922. If you guys have the indicators, you're going to be able to have these calcs right on your desktop. So if you don't have them, go to Kendall Report/indicators and kendallreport.com/indicators, and you can find out how to get signed up. Oh, look at that. The Frankenstein got killed. Thank you. Thank you, a moderator. Appreciate that. So that's awesome. But anyway, so the NASDAQ, we go through the weekly, and you'll see there's some new objectives. I know these weren't out yesterday, so this is brand new. 12,006. I'm going to round off numbers. 12,600, 13,300, and 13,700. Those are new calcs in this pattern that just came out with the this week. So it might have been out last night. This number is out here. It's not the monthly. But you can see the algos are saying that this is kind of the final flat week, and we're going to start to see everything turn up on the NASDAQ. So these mega caps are going to start looking really good here. And maybe Meta will lead the way tomorrow after market close tomorrow. We get the earnings on Meta, and maybe we can go through all of the, maybe we can go through some of the stocks tomorrow, and hopefully we don't have a crazy day tomorrow with volatility and weird erratic movement, so we can maybe get into some of these things. We'll have 3 hours together. So, but this chart is set up pretty good. If we flip over to the daily, same thing. Looks like we're going to see the upside. And I see some folks talking about Kramer saying bull market. So yeah, you can't be wrong all the time. But we'll wait till he starts frothing at the mouth on this stuff. So but I do see that continued positive movement. So let's go ahead and get to the Russell. So this is interesting on the Russell. This is the cash. So upward targets, I mentioned this quite a bit. 2007, 2076. Market's trying to break out here and start to surge. All these indices are lined up the same way in that they're suggesting that we're going to probably run up tomorrow. It'll be a peak in the action, and we should stabilize coming into Thursday or Friday. Okay, off to the 10-year. 10 years also suggesting a little higher yields for the next couple of days. I talked about some of the objectives last night. We're looking at 3.87. That's probably about the extreme. I mentioned 377, maybe 387, but it's not really that substantial from that standpoint. I'm just like thinking at the moment we're going to see some upside, but nothing beyond probably 380, 390 would be an extreme right now, and 335 is probably been the bottom from that standpoint. Like I said, folks, I'm going to get through this video pretty quick tonight. We're looking at the crude oil next, and crude had a pretty nice reversal day yesterday. Still some sideways here. We're just locked in this range. It looks like we're going to stay under the 10-period moving average. That's at the 80 handle, 80.07. Probably stay sandwiched between 21 and the 10, 78.25 and 80.06 on there as far as that goes. Looks like the potential for some upside maybe as we come into the end of the week from that standpoint. Next, we'll cover gold, and gold is just one of my favorite markets right now. Just like I said, we probably have some consolidation above 1900 to 1930, maybe as high as 1950. We're setting up the next move, and that's probably best observed when I'm going to go all the way to the monthly chart. We haven't looked at this for a while, but this monthly chart is like really extremely bullish, where it looks like we're going to see the 10-month moving average start to turn up, and it's at 1794. That's going to begin all of this, and I'm going to draw something in on gold because this is too good to ignore. And let me show you what I'm talking about here. So I think this is a significant pattern, and I've talked about these Fibonacci objectives. This is a monthly graph on nearest future gold. 2495 is like the min, and there's some crazy numbers being generated. 2809, $3,000 gold, right? So that's crazy. So you have to ask what's going to happen if that happens. How is it that equities are looking bullish and all these things that are lining up, and even interest rates looking like they're going to go up? What I'll do is tomorrow, if you folks will remind me during the live stream, I'll cover the Dow live tomorrow. Okay, so we'll do that tomorrow. So anyway, but the gold on a monthly looks really good, and here's what I want to show you. I'm going to draw in a couple things here. I'm going to put a box around this consolidation. When I get an arrow up, and I'll change a couple things so you make sure you can see this. But this pattern right here, this is really probably a complex 1-2, and the thrust that could come out of here could be insane. And this means that Peter Schiff, yes, could be right. He could actually be finally right. It only took 23 years. But anyway, the point of all this is that this is a really big pattern, and whether we get this crazy surge up into these levels here, these fib targets, yet to be seen. But the monthly charts are insanely bullish. Every chart you look at here on gold is really looking like that. So this is the primary trend that I think is happening. We could see more of this sideways, but it looks to me that the next couple months, next quarter or so, is going to be fairly bullish, and I won't make any correlations, as I always talk about doing the reverse fundamentals. I won't go there at the minute. So let's go to our final market, Bitcoin. We can sign out and get ready for tomorrow's FOMC coverage. Bear with me 1 second, folks. We'll just stay with this monthly to start with. And I think this is fairly interesting, is that the monthly PPMs are still very negative. We have a 10-month moving average, so we're kind of defying gravity on Bitcoin right now on a long-term basis. 21.5, I talked about this number in this area a couple of times. let's flip this over to a weekly. The PPMs are staying positive. The algos are staying relatively positive. We're looking at 197 is the current 10, and that's going up roughly about 600. So that'll be right around 20,000, and next week we'll be in the mid 21s. Somewhere in there is going to be where there's going to be support. So let's go over to the daily, see if we can get a handle, a little better fine-tuned handle on this. So I talked about this the other night. We got the reversal. The PPMs on the PPM 1, 2 are all looking like we're going to roll over, and the potential at the moment is that we'll at least test this 21 period moving average. We got close to it the other day, but that number is right now 22,068. And this goes to 21.5, 21.68 is going to be key levels to watch. And I think this consolidation up here will continue. We should get a bounce off of the moving average there. And I'll just come up for a second. And one of the things I want to tell you is that what's interesting about this pattern, we developed a rule way back in probably 1984, 85, that when you get in a trend like this, the first bounce off the 21 period moving average oftentimes will retest or make a new high. And especially, we still have some pretty big momentum. The angle of attack is pretty steep. So if we do print that over the next several days, and that number, like I said, right now, let me just look at that, it's 22. We'll just round it off, 22,100, 22,000 even, right in that level. We should see a bounce off of that level and at least come back towards the 10 period moving average, which would be 23,000. So there's a nice little trade in there if it holds that value, and that should be fairly relevant as we go forward. So I'll come up for the end of the video. Appreciate it, and I thank the moderator for hopefully taking care of some things, and we'll see what happens. See, we got somebody hanging out here. I'm looking at this. So yeah, we didn't get them all, I guess. Let me just do something real quick. So, all right. So anyway, thanks folks for watching tonight. Remember, tomorrow we'll be live for 3 hours. We'll flash back to the 2021, 2020 days where we had those long streams. And if you're in the live room, just remember that's where we'll be meeting tomorrow. And you can ask questions in the live room if you have anything. I'll pay attention to those we'll get top billing as far as questions go tomorrow. So anyway, thanks again for watching, everyone. See you tomorrow at 1 p.m. Eastern time. Make sure you get the indicators and go from there. So we're looking at kendallreport.com/indicators. Check it out. We'll talk to you real soon, like tomorrow at 1 o'clock Eastern time. Have a great day trading. We'll see you then.